Wednesday the 1st of September, and just running through the numbers. Going to talk about what we saw yesterday, what we're seeing today, what the potential trade opportunities are. So let's go ahead and jump straight into it. We're going to move right over to this screen first. We had some news that just came out. We had the ADP non-farm employment change report. This is as I mentioned yesterday, the precursor to non-farm payroll, which is the main report, the one that's most heavily watched and could be the most reactive. We had a pretty significant delta between forecasted and actuals here. Market hasn't really reacted to it though. We haven't seen any major reaction one way or the other, either in gold or in the S&P. So it'll be interesting to see what happens as the regular market session begins. Big things for us though is having a quantifiable way of measuring when we take action and why we take action, and not getting too caught up in news or outcomes of the news. We want to know when news is happening because that helps us determine if we should avoid a volatile marketplace. But as far as the outcome of the news, we don't want that to influence our trading, because we have these potential biases that we could set based on what we think should happen from the news. But what we often think should happen and what actually happens are two very different things. So that's why we need a quantifiable way of measuring when to take action. So ultimately, with that said, BTX method tells us we're looking for long opportunities on the S&P. So we'd be looking for the market to start pulling back a little bit. And then, if we do break out back in the direction of that current market trend, then we would look to go long. Yesterday I mentioned, if we really broke down over here and saw a big sell-off and got down to around 4,500, that would be the spot to just say, okay, I'm going to step back and walk away. Today, if we broke down to that far today, if it did start to move and had some really heavy selling, into the regular session, that same 45, you could probably actually look at about 45.15. If we broke down, 45.15 and closed below this, that would be the spot to just say, hey, I'm not going to even look at longs at this point, because it could mean that the market is beginning to reverse, especially coming into non-farm payroll. We'll see. I don't know, but the bias tells us that we're still looking for long trading opportunities. So, until we, either get way down here and break below it, close below it, that would be the opportunity to say, hey, I'm just going to step back, walk away. But until then, though, a healthy pullback is good, and then we'll look for breaks back into the long direction. Gold, crude, same thing. We've got a long bias here on the 30-minute long bias in the 4 hours. So we're looking for long trading opportunities. Crude is in a bit of a channel right now. We're seeing bottoms set up around 68.30, tops setting up around 69.22. Over here, you call it 69.25, just to have good even numbers. So we're in a bit of a channel here over the last day and a half or so. What we could watch in crude, obviously we're looking for long trading opportunities, but if we do break down below this 68.20 area, we could be looking for shorts on that, which is a counter trend trade. If you do look for shorts on that, keep it tight, like we've said before. Keep it tight, and look to move your stop loss to break even, when it moves about equal to your initial stop loss in your favor, and then maybe peel off your profit at 2x. Gold is in a long bias, so we're looking for long trading opportunities. We had a trade opportunity yesterday here. We mentioned yesterday that pullbacks are healthy. We wanted to see it make lower highs and lower lows, lower highs and lower lows. And then we can see where it did break back out in the direction of that current market trend, giving us an opportunity there to pick up a little bit of profit, potentially, right? It would have been about 4 points of risk with about 8.5 points of profit opportunity there on gold, just sticking to that method itself, right? So that's what we're looking for again today on gold, is to see if we get a little bit of a pullback here, lower highs, lower lows, lower highs, lower lows, and then a push back in the direction of that current market trend. Don't overcomplicate it, don't overthink it. Have a method that you can stick to consistently, doing the same way every time, every day, that's what gives you that long-term expectancy for success. It's not exciting. It's certainly not exciting. If trading is super exciting, you're probably doing it wrong because you're taking excessive risk or you're doing things that are outside of an actual quantifiable plan. When things are exciting with trading, it's because you're taking all these active actions, right? We don't have to do that. We could sit back, let the market come to us, take trades when the market tells us to take trades, be patient, and that gives us our long-term expectancy by having a quantifiable method that we can consistently do. So anyway, that's it. I'm not gonna harp on that too much. I'm gonna let you guys go and get back to see what's happening over here in the trading world, and hopefully you guys stick to the plan, trade safe, and we'll talk to you soon. I do want to do a market recap, not a market recap, a monthly recap on Friday, so we'll work to get that scheduled so that we can run through all the potential trade opportunities, what those look like, so on and so forth, over the past month, so you guys can get an idea of how things shook out utilizing that BTX method. All right, so